In a world where increasing financial disparities are becoming more evident, the alarming fact that billionaires often evade paying taxes stands out as a stark reality. This issue highlights not only the vast economic divide, but also the loopholes and legal strategies that the wealthy exploit to safeguard their fortunes from tax obligations. As ordinary citizens adhere to tax regulations, watching a significant portion of their earnings go to the state, the ultra-rich navigate a different landscape altogether. Billionaires employ a myriad of tactics to minimize their tax liabilities. Offshore accounts, shell companies, and strategic philanthropy are just a few tools in their arsenal. By sheltering their wealth in tax havens and investing in assets that appreciate over time without immediate tax implications, such as art or real estate, they can effectively defer or altogether avoid substantial tax contributions. This intricate web of financial maneuvering keeps their prosperity intact while the average taxpayer shoulders a heavier burden. A deeper dive into their financial strategies reveals the effective use of laws designed to benefit capital over labor. Capital gains, often taxed at lower rates than ordinary income, become a major source of wealth for billionaires. Moreover, by accessing complex financial instruments and employing high-cost tax advisors, they can further minimize their taxable income. This creates an imbalance in the tax system, where wage earners see a larger proportion of their earnings taxed compared to those whose income derives primarily from investments. The ramifications extend beyond financial aspects, impacting social and economic stability. The perception that the rich can evade taxes contributes to widespread distrust in the tax system and government institutions. It also exacerbates income inequality, as government programs and public services that rely on tax revenue face underfunding. This disparity undermines the social contract, where everyone is presumed to contribute a fair share to the common good. Addressing this issue requires comprehensive policy reform and international cooperation. Closing tax loopholes, increasing transparency in financial transactions, and implementing stricter regulations on offshore accounts are essential steps. However, these measures face strong resistance from those benefiting from the current system. Advocacy for change thus becomes crucial, with public pressure and political will being key drivers for reform. The challenge of ensuring tax fairness is a complex and ongoing struggle, highlighting the methods used by billionaires to evade taxes and the impact of the only through concerted efforts can we hope to create a tax system where contributions are proportional to one's financial standing, thereby fostering a more equitable and just society.